Hello, this is Demon Malone with Comps of X. Hope you're doing well today and again some good trades. There are ways to scalp the market using the Trader's Dynamic Index. In a previous video I talked about counter trend scalping using the Trader's Dynamic Index. Today I want to talk about trend scalping using the Trader's Dynamic Index. Now these techniques can be used on a 1 minute, 5 minute, and on a 15-minute chart. And there's a particular setup we want to look for. In the previous video, when it came to counter trend trading, we were looking for the green line to break above the blue volatility band, to break above the red and be above the yellow and above the 68, sort of like what we have right here. So when we're above and the market then comes up and then hooks back over, I refer to this as the TDI hook, crosses the blue and crosses the red back towards the yellow line, we look for a counter trend scalp. Problem is that if the market baseline, the yellow line, has a very strong upward direction in this case, there's a chance that the green line is simply going to come down and more or less bounce back up. And as we see in price action, our counter trend move in this case was only for about 9-10 pips less the spread, and then we had this strong push back up. So what we're going to be looking for from a trend scalping perspective is a chart pattern bias that in this case we're looking for the market to turn and to trend back towards center. When everything's up high like this, we're looking for the market to turn and trend back towards center, back towards the 50 line, and look for a trend trade in that direction. Now, I'm not suggesting this is a trend reversal. It's just the fact that we are in an overbought territory when we're above the 68. And make note, the market baseline, the yellow line, its home base is the 50 level. And that's why when the market is at near the 50, especially when the yellow, green, and red line are near the 50, I'm not a real big participant in the marketplace because it could go either way. But when we get a situation where the yellow line, the green line, the red line are all up pretty high like this, I'm looking for the market to move back towards center. Okay? So this is a good setup of a situation of an overbought condition, and the green line comes across the yellow, and when it closes below the yellow, then I'm looking for a short trend trade that I can scalp for a few pips the other way. Now obviously today we had this big move. However, I'm using this chart to show you the setup that we had right here. We'll go down to a 5-minute chart in a moment, but this is the setup that I look for to catch that trend trade, that trend scalping trade back towards the 50. Now just on the flip side, we have the dollar Swiss making this move all the way down. You can see this push down, the yellow line coming down around the 32. Now it doesn't have to necessarily go below the 32, but you just want it pretty low. And then what we're looking for is the green line to come over, cross the yellow line, and then look for that push back up. So this ended up being a nice trade, and then it broke the blue volatility band, had a continuous nice trade up, and then this ended up being a TDI hook for the counter trend scalp back towards the market baseline. Let's take a look at the dollar yen on a 5-minute chart at a similar setup that I'm looking for. In this case here, we see that the market went up high. Here's our hook right there from a counter trend move, but in this case I'm looking for the trend scalp. So I'm waiting for this to set itself up to show that we're in an overbought situation. A double top here refers to the fact that we should be looking for a short move to the downside, and that's what we get. Notice how the market baseline gets up kind of high, and what I'm looking for on the market baseline, the yellow line, is for it to go a little bit flat. I don't necessarily need it to turn over yet. I just don't want this strong push to the upside. I want it to more or less kind of go flat, and that's what it's doing here. So when it crosses over and closes below here, now I'm looking for that scalp trade right about this area right here. I'm looking for that scalp trade, and I'm going to be looking for it to push down. And again, in a scalp situation, I'm only looking for 5, 10, maybe 15 pips. This came down right here to about 11 pips, less your spread. Then it bounced back up on me. Now, one thing of note in this particular technique is to focus your attention on the green line compared to the yellow line. I've often told traders that when you're using this technique, you can go into the Synergy TDI parameters. I'm using the Synergy Pro, which will be releasing soon. but you can do this with the Synergy Basic, you can do this with the Advanced Synergy, is simply go to the red right here, highlight that, and set it to none. Okay? Whether you're doing it in the inputs or you're doing it under the color tab, you can just go to the red and set that to none. And click OK. And that removes the red line. So now your focus is on the green line crossing the yellow line fairly near the 68 level, up kind of high right here. Notice how the market came down and we get this little inverse head and shoulders look, and the market crosses over right here. Take a look at this. And again, in this situation, we're not all the way down to 32, but we're below the 50, and this is starting to cross over. Look at price action. Price action gives us a double bottom scenario, and now we can trade this crossing over right here, and now we just follow the trend up. Price is above the price action channel. It continues to roll up. Look what you have here going on. Look what the green line is pointing out in the Traders Dynamic Index. Does this not look like a head and shoulders pattern? A high, a higher high, a lower high, and then the market falls back to the downside. So that would get us a situation where we'd be possibly looking to go short on this move back down. But again, we had a nice little trend scalp to the downside. This ended up being more than a scalp. Had we entered, say, right in that area, that ended up being a better trade. This one went up to about 19, 20 pips less the spread. That's a nice, scalp trade in and of itself right there. Now you can even do this down on a 1 minute chart. Let me give you an example of what we have here. Again, let me take out the red so we can focus our attention on just the green and the yellow lines. Okay. Now notice again, the market baseline is up near the 68. Look at our price pattern situation, the TDI. Doesn't that look like a head and shoulders? Got a high, a higher high, lower high, kind of the neckline coming across. And notice that this neckline coming across is pretty much right where we're crossing over right there. There's a good spot to potentially enter the market to the downside. We enter somewhere around this area. Now the market did pull back up on us about 7 pips, but if we held in on this trade and followed what we see right down here, this bounced back up, crossed over somewhere right in here, that gave us about a 10 pip scalp on a 1 minute chart. So you look for those type of setups. I tend to want to look for the market to be up high or to be up low and then trade from there and see how this gets up fairly high, crosses over here, starts working its way back down. So right there's a technique. Again, what we're looking for is the market baseline to be up fairly high, the green line crossing over. Or we're looking for the market baseline to be fairly low, around the 32, showing a potential reversal based on the price pattern in front of it. This being a double bottom, that means a long bias to the upside. And you can see that over and over again in the price charts as you trade. There's another one right there. Look at this one. See here, another double bottom scenario. Down low, catch the crossover right here, and then this is a nice little push up. Again, in this case, about 7 pips right there. The market went flat. Here's one here that this is down low, crosses back, not all the way down to the 32, but down low, get the hook, confirm, make a move to the upside here. And let's say we entered somewhere right around here. Now the market did push back down. It's about 6 pips, but then we have a nice little push back up for about 10 pips right there. Well, this is a technique for using the Traders Dynamic Index to find trend scalping opportunities, focusing your attention on the green line crossing the yellow line when the yellow line is up near the 68 or down low around the 32. And the green line right before the crossover shows a chart pattern of going the opposite direction. So like a double bottom, we would look for a bias long. A double top or head and shoulders, we would look for a bias short and catch a trend scalp crossing the yellow line back to the downside, up high like this, double top, catch that move down, and then you want to be out before this green line starts crossing back over the yellow. Well, folks, it's Demon Malone with ComposFX. I hope some of this information about scalping with the Traders Dynamic Index will help you in your trading. Review the counter trend video I did previously and review this trend scalping technique for those of y'all who enjoy scalping the marketplace. Y'all make it a great day, get some good trades, and we'll talk to you next time. Bye-bye.